Hello fellow traders, welcome to a new video. Today I want to talk about how we use the Fibonacci tool to get the sniper entries as we do in our MFX strategy. So to start off with, we basically only use the Fibonacci retracement tool, and that's basically just this one. You also have the Fibonacci extension tool, which you have to enable these levels, these 1 levels and above. We don't do that because that's mainly used for take profit levels in other strategies. That's not our favorite type of take profit strategy. So yeah, for now we only use the Fibonacci retracement, and I will only go deeper into the Fibonacci retracement. Where do we use it for? We use the Fibonacci retracement for acknowledging premium and discounted, and everything from the 0.5 to the 1 is considered premium, and everything below is considered discounted. And of course, when we are in a downtrend, we want to sell from the premium zones, and when we are in an uptrend, we want to sell from the discounted zones. And the reason for that is think about it like buying an iPhone. If you want to buy an iPhone, you want to buy it as discounted as possible. Same for when you sell something, you want to sell it as premium as possible to get the most money out of it. And that's the same thing what we do with trading. So yeah, how do we draw our Fibonacci? So let me delete this. Imagine we are in a big downtrend. We have a move to the downside, creating a swing high and a swing low. Then it does a retracement, and it breaks down again. So now this is considered our new swing high, and this is considered our new swing low. Then you want a pullback to at least the discounted or premium zone, where we look for confirmation where we can sell from again. So now, how do we draw it? From in a downtrend, you want to draw it from the top to the bottom of this swing high and this swing low. From there, you can see I have all these premium zones marked up, these premium numbers. These are my numbers. I will show them later in this video too, so you can copy them. But we only trade from the premium zone in this case because we are downtrending, and that would be from the 0.5, 0.618, at least these levels. And these levels are also considered our golden zone. And the reason for that is because a lot of times price just tend to respect this golden zone between 0.5 and 0.618, and from there reverse and continue to the downside or upside in an uptrend. So let's mark this out as our golden zone, and from there we look for confirmation. Exactly the same thing in an uptrend, but then in reverse. So you have a up move, you have a retracement, then you have a break of structure to the upside again, confirming the uptrend, and then you want to see a move to our premium and discounted zone, where we can look for confirmation to buy to the upside. So what you want to do here, again, from the swing low to the swing high in this case, and then we want to look for trades in this whole discounted zone, because now this is discounted because we want to buy and we are in an uptrend. So you want to look for discounted prices, and that's everything from 0.5 to the 1. And now we can consider this as our golden zone. So we surely want to watch this zone, and this of course in combination with other factors explained in depth in our strategy, in our mentorship. You can find more info about the mentorship in the links below. I also have a private mentorship where you can learn and where we can do one-on-one sessions. So that's basically it for explaining the premium and discounted. We also use it for entries. For example, if we zoom in and we are in the golden zone right here, and imagine this is the price action I draw now. So we're changing from this downtrend, we're changing to an uptrend. And price clearly indicates that and gives us, for example, a change of character. So this would be a change of character. And I will go in this later in the video into real chart examples where you can see it live, or basically backtesting. So now what we want to do for entries is we want to draw from this swing high to this swing low to this swing high. Like I said, we can use it on all time frames. Like the market is fractal, so it does everything over and over again on every time frame. So what we could do as an entry, we could say, hey, we confirmed the uptrend again. It looks like we are continuing to the upside. So now I just want to buy in a discounted zone. And as we are on such a low time frame, for example the 1 minute, or for example even the 1 second, as we tend to do a lot of times, you can simply say, hey, with all the confluences that are coming along, also with the higher time frame, we can place our entries on a 0.5 because that's where the discounted region starts, and then we put our stop losses below. So imagine this would be our entry on the higher time frame, and that will be exactly the same as this one. This is just a little bit zoomed in, and then we can target, for example, the high, or you can even target, or we can even zoom out more and then see other structure on the higher time frames, like the 1 hourly or the 4 hourly, and we can target way higher. So yeah, that's it for this. We use it to look for our premium discounted zones, and we can use it for entries. And yeah, that's basically it for this. My levels, why do I use these levels? And I can show you that right here. This is a picture of Fibonacci. And as you can see, this is the swing low, and this is the swing high. So when you draw that Fibonacci, you want to look for a retracement. We only look for everything between the 0.5 and the 1, the 50% and the 100% retracement. And so yeah, we have levels right here. It is possible that it does not even tap the 50% and then reverse on you. Then you call it simply a miss of a trade, because also the trend is too strong. And as we have a rule, we only trade from 0.5 to the 1. There is a possibility you miss some trades, but that's part of the game, and you have to learn to accept that. So yeah, this is also an indication, because these indicate strong, normal, and weak trends. When it goes to the 100% reversal, that indicates the Fibonacci is not valid anymore, and it wants to reverse on you. It wants to go the other side of the trend. So that's where maybe your change of character comes in, and you can look for shorts in this case. And then you again draw your Fibonacci. Once it passes the 0.236, and then look for shorts. The 0.236, we use that to see when our Fibonacci becomes valid. For example, you have this downtrend, and maybe your price reverses to here and breaks to the downside again. This indicates like we did not make a new swing low yet. So we want to see it come past this 0.236, and then all these levels become valid to look for entries or look for a premium or discounted zone. So that's the reason why I only use this one below the 0.5 and 1. You can have my levels, and you can have my calls over here. I only use these levels. So yeah, maybe pause the video here and copy these. It doesn't matter in which way you do them. You can for example also put the 0.886, put it over here. It doesn't really matter. It will come in order anyway, in correct order. So yeah, that's basically it for that. Then I want to go over some real chart examples too. As you can see over here, we were in a downtrend or in an uptrend, my bad. And from there, we saw this change of character happening. So what can you do to look for an entry? You can draw your Fibonacci from this swing high to this swing low, these one over here. And then you want to look for your discounted region. So what you can do is either, like Smart Money does a lot, mark out these order blocks and just go from the extreme. POI. But you can also just mark out the whole zone from the 0.5 to the 1. And from there, look for confirmation and entries. Because you can also see we have imbalance here. Like I always say in the mentorship, it doesn't always have to fill the whole imbalance. It can simply tap it a little bit and fill it a little bit and then reverse on you. So what you can do here is when you see it tap this golden zone, the 0.5, 0.618, you can look for entries for short. And that's perfectly valid because we are in a premium zone in this case. From there, if you missed it, no problem. Again, you can draw your Fibonacci from this high, this swing high to this swing low. And you see, again, the 0.5, 0.618. Which is again our golden zone. And it tapped discounted, so that makes it this valid. Let me do an entry example over here. Let play back like this. So again, let me draw it from the swing high to the swing low. Mark up our whole level, our whole premium zone. And from here, you see it touch it, fill some imbalance, sweep these highs, being pro-trend because he made a change of character and he broke down even more. So this could be a very nice entry. From there, I go, for example, to a lower time frame, 5 seconds in this case. And again, you see this change of character happening. So that's what I want to say. With the market is fractal. So from this change of character, you could, for example, draw your Fibonacci again. Oh, my bad. This swing low. Because this was the change of character and then you want to see a pullback. Again, you see it. Respect the 0.5, 0.618, our golden level. And you can put your entry like this. And this was a perfect sniper entry. As you can see, that ran for 10R in only a matter of 14-15 minutes. So this is a perfect sniper entry. And as you can see, like I just said, the market is fractal. So it simply respects the market structure, what it's showing and what you want to see, shows it over and over and over on every time frame. Also on the daily, the 4 hourly, the 1 hourly, the 15 minute, the 1 minute and the 5, even the seconds charts. So that's also why our strategy is applicable on literally every time frame and every type of trading. If you want to swing trade, you want to day trade, you want to scalp, everything is possible with our strategy. Because we trade solely on market structure and on price action and on confirmations, liquidity, Fibonacci, etc. So yeah, that's basically it for this example. You can see if you even zoom out for your take profits, and that's why we don't use the extension level. You know when it and from here you can also draw your Fibonacci from the swing low to the swing high. And then you know you want to target at least the 0.5. When you do that, you can see you're already bagging a 23, 24, risk to reward ratio. So imagine putting 1% on this. You can already be up 25% in one quick trade, targeting the 0.5. As you can see, it did not do that. Because it simply does not always have to do that, and that's also why we take partial profits, for example, at the low over here. But if it really wants to melt, really wants to retrace back, then you would back a crazy amount of crazy high risk to reward ratio and gains. But maybe the reason was for here that it came up is to fill some imbalance over here. We also have some imbalance over here. I do believe it comes down. As you can see, it's pretty choppy over here. It came back down a little bit. Not even respecting the 0.5 in this case. But in a lot of cases, in most cases, it will do that. So, yeah, maybe it's a little bit of a bad example I gave now. But still, on the lower time frames, we would have taken a nice profit. Because you can also just target these lows, for example. And then at least take partial profits there, because you just want to secure some profits. And that will be a 4.5R. So, yeah, so now I showed you an example of premium and discounted with the Fibonacci, but also how to use it when taking an entry. Same right here. As you can see, we're starting to uptrend. We made a change of character here. Then we did a retracement. Then breaking structure to the upside again in form of a break of structure. This is on a higher time frame. Then you can see we did a sweep of liquidity over here. I will go in that in other videos and also in the mentorship. So this is our sweep of liquidity, and from there we start to uptrending again. So from here, what do you want to see? Again, you want to see a change of character, which is this one, or maybe even this one. Doesn't really matter. It shows here we are starting to uptrend again. From this break to the upside, you want to see a pullback to a discounted / premium zone. In this case, because we wanna look for buys, you wanna look for a discounted zone, which is this one. So this will be the level we look for longs. Then you can also notice we have liquidity, which got swept also. We have a lot of liquidity. So from there, we can even look for lower time frames and look for an entry over here. We want confirmation over and over and over again, because it can simply trap you. Now, zooming in into this price action, what do we see? First of all, we see a fake change of character. Fake charge. From there, we see a sweep of liquidity. And that's simply sweeping out the early buyers because they got trapped over here in this down move. So this for us confirms again it took liquidity here, so it has more reason to go to the upside. From there, you draw your Fibonacci for an entry. And this is just one of the 3-4 entry models we have. We also have other type of entry models. This is just the most aggressive one, because we enter on limit orders here, and I simply not like that a lot. But if you have all these other confluences going into your preference, why not? So the 0.5 to the 1, our discounted region on our entry time frame, really important, because you simply don't want to analyze this time frame. You don't want to enter from the 0.5 and then put your stop loss below the 1, because you can maybe have a 30-20 pip stop loss, and that's way too big. We want to refine it down, and as the market is fractal, you want to look into it in another perspective. So We took our entry on a 0.5 with a limit order on our entry time frame. Now you can see we only have a 5 pip stop loss over here, 5 pips. And that's on a 30-second chart. We also refine down to the 1 second and 5 second. We might even have just 1 pip stop loss or 3 pip stop loss on average. So you took your entry, your stops below, played out beautifully. Got a bit close over here with this strange wick. That happens sometimes. But now you want to zoom out and you know what to target because you draw your Fibonacci from this low to this high. So this, and as we are uptrending and we did a change of character and a break of structure, you want to see another break of structure. So you want to target these highs, and that would be a 6R. A 6R trade, and you want to take at least some partials over there. Then you can zoom out even bigger, and then look again to your higher time frame analysis. Now we can target this high over here because we broke structure multiple times to the upside, and now we want to see a break structure to the upside again. And this is where this entry becomes a real sniper entry. Let's play it out. Let's see how it plays out. I'm not sure anyway anymore because it can also simply tap us out. But at least you have taken partials over here at 6R, TP1. That's crazy. Like a lot of strategies just take profit at like 1R or 2R. We target major risk to reward ratios, but with a reason, a clean reason. As you can see, it did not fully play out. It decided to respect some zone over here. And there was also maybe a take partial profit area of you. So you could have taken partials multiple times to the upside, and then you would have backed a 26R trade. And that's huge. Sometimes it's just choppy and it's just doing random things. Part of the game, and that's the reason why we manage our trades like this and why we take profit multiple times. So yeah, I hope that's all clear to you. I want to close it here. I basically told everything about Fibonacci and everything about how we use it. Please like and subscribe if you want to see more free content like this, and then we continue. Then we are able to continue to upload free things to YouTube. Please stay engaged. Leave a reaction down, and yeah, let us know what you think about this. Okay, guys, that's it. I hope you learned a lot from it, and yeah, we'll see you on the next video. Ciao, ciao.